Hello traders, welcome to Fractal Magic Trading. I'd like to introduce you to a technique for trading fractals and using price action to hopefully improve your trading skills. Now this isn't an invitation or exhortation to trade the market live. It's obviously the usual warnings apply. You should only trade with money you can afford to lose. You should take advice from a financial advisor and trading demo trade until you're sure that you've got your skills where you need them to be to trade a live market. So if we start with that advisory out of the way, this is for training purposes only, and it's not an invitation for you to go out and trade your money, but that's up to you. So let's start with showing you how to draw fractal support and resistance. So, for example, if you take two up fractals and join them together, where the second fractal is lower than the first fractal, you'll find that this acts as a resistance line, and when price breaks through this, it tells you that there is a bullish bias in the market and you should be looking to trade in an upward direction. And conversely, if you trade in a downward direction, if you trade a support fractal line where the second fractal is higher than the first fractal and price breaks down through this line, you're going to be trading a sell bias or a short bias in the market. So this is you always look for your bias to trade in a higher time frame. So if you're trading the daily, you'd look for your bias in the weekly. Because we've drawn our fractal trend lines initially in the daily, we'd be looking to trade the 4 hourly. So if we find those fractal lines, for the sake of this, I'll go back a couple of months just to demonstrate how you can use these fractal lines with price action to place your trade. So what we're looking at basically is a rejection of higher price price to the upside, and we are then going to be interested in trading to the downside. Now, price broke through your daily chart, support line there, as we did on the daily, and we've now come down to the 4 hourly, and the first thing we see is a big pin candle. So normally speaking, I would like to see, let's zoom in a bit. Normally speaking, I'd like to see a pin where the upper pin is at least 2/3 of the total candle size, but in this instance it looks like that's 37, that's 28, so certainly not 2/3, but it's over halfway, and that is sufficient for me to see that there's been a rejection of price to the upside, and so that is definitely somewhere where I'm going to dive in and take a trade. So that would be my first trade, and I would be looking to gain a good return on my first candle. So I would get at 50%. I would get a 1-to-1, and if you're trading in several lots, you would possibly then go for a 66%, which give me my 1-to-2, and then 75%. Let's see if we make 75%. Yeah, we make 75%, and because it's at the start of the trend, we're lucky if we get a 1-to-4, and yes, we do get a 1-to-4. So off that first candle, we get a good return. Then going down from here, we'll see there's a retracement here, and then back up, and then a breakdown, with a lower low, lower close below the low of this candle. So that is another good entry signal. So that's the pin bar candles we're looking at, and we're also looking at lower low, lower close candles to get in on. So there's another one for our pot, and if we look at that again, let's try and zoom out a little bit. If we try to grab hold of this, so it's there. We get our break even there, and on the first lot we get a 1-to-1, and we move the others to break even. Then we'll get our 2-to-1 there, and we'll get a 3-to-1, and depending on where we move our stops to, we get a 4-to-1. So quite a nice return. And then moving on, we get another engulf there. So that's going to be another trade. So that's trade number 3 of this move. And we get 80%. And we certainly get a 1-to-1 there. And then, again, depending on where you place your stops, I mean, you could have been stopped out. If you were brave enough, you would have kept your stops way up here somewhere, because it was quite a small candle, and indeed you could have got 1-to-4 on that. But if you were trading cautiously, you would have got your 1-to-1. You then got these railroad tracks going. Effectively joining those together, you've got a downward pin. So you ignore that. Joining these two together, you've actually got a bear candle, but which also functions as a pin candle to the downside. If you melded the two bars together, which is something I do quite a lot, so I see what's happening in the higher time frame. So here we go. We've got another one there. And in terms of trading that one, we'd have got a 1-to-1 there, and we would have got a 2-to-1 before a retrace, and depending on where we moved our stops, we could have been taken out on a 2-to-1 there, but not a bad return. And then we've got this little combination here. You could either call that some kind of double top sagging shoulder type, or a dog star, or possibly an evening star, doji, various different names for that kind of setup. I don't much care what they're called. All I know is that this is a good representation. If you meld the 3 candles together, if you put these 3 candles together, what you've got essentially is a pin candle. So you've got price comes in here, it then goes up to here, and then comes down here and closes here somewhere. You can't get these lines quite straight, but let's try it here. It keeps jumping about, but you'll get the idea. If I turn this to a line chart, you can see that this effectively is a pin candle. So I would be trading this as a bearish pin candle. And again, I don't know what it looks like. Just eyeballing it, looks like a 1-to-1, but on the 50% retracement we get that. We get the 2-to-1, and again, if you had kept your stops up where you started, you might even have got a 3-to-1 there, possibly. Yeah, just. But again, I think 2-to-1's quite realistic on that. So carrying on from here, I'm just aware that we're getting higher fractals here. So just to keep an eye on where the trend is going, we'll do that, and we'll do, as we're going along, as you see a fractal, high fractal, draw a trend line, and if price goes above this, you want to be very circumspect about getting into the market at that point. So I'm looking here, see this pin candle. It does close below, so it is a tempting one to take, and I probably would have taken that, knowing myself, even though it's a green body again, and I'd prefer a red body, and I'd obviously prefer, I don't know what fraction of the candle that is. Let's have a look. So that's 42 to 24. It's almost 2/3. 24, so we'd want 48 really. So we're a few points short of the traditional 2/3 for a pin candle. But as I said to you before, if it's over half, if the top of the pin is longer than the rest of the candle, which this certainly is. This is 44 versus 24, so it'd bring me down to there somewhere. I'd be happy to take that on, as we still haven't closed above this trend line. But obviously, if you're being cautious, you can see that the market's starting to trend upwards. You might stay away from that particular trade. Let's just see how that worked out. So you would have got your 50% 1-to-1 return on that one, just. So yes, that shows the merits of staying out on that kind of trade. And then of course the downtrend comes back in at this point, telling you it's okay to start trading here again. So you might well have taken this candle on, which is well, let's just mark these ones in. So you quite possibly took that one on. You quite possibly are going to take this one on. In fact, definitely take that one on. And let's see how we did on that. For some reason I can't pick that up. Let's move that out of the way. Oh, I've got it. So let's see, on our 50, I've got it the wrong way around, which won't help. So on our 50%, we would have got a 1-to-1. So that's a win again. So far, we've got wins all the way. So that's the downtrend. And then again, we see this fractal resistance being broken. and that would tell us to stay out of this market. But if you wanted to trade this, you would then drop down to the hourly chart and trade above this line and trade it upwards in a counter trend. But it wouldn't be counter trend if you're trading the hourly from the 4 hourly, it would be in trend. So that's another option for you, is to keep dropping down to time frames. But for the purposes of this this video, I'm going to keep it simple, and we're just going to wait out of the market until we get a signal to get back into the market. We know on the daily time frame we're still in a downtrend, so we're just going to wait for the 4 hourly to tell us we're back in the downtrend. And that happens with this candle here. So we're going back to our tool to see we get 50%. We get retracement. We get 66. So we get 1 to 2. We get 1 to 3. We don't get 1 to 4. It depends where you put your stop, but certainly I would have been stopped out for a 1 to 4, but I would have certainly made a 1 to 3 on that particular trade, as I'm sure most people would if you're trailing your stop to the amount that you've risked. So moving on, let's see. Over here we've got a lower low low close. It may in fact be an engulfing. Let's just check that the low is 15475. The low there is 15452. So yes, it's a lower low close. It is in fact a bear engulfing as well. So on that one, we put a stop at the top. Get 1 to 1. We get 2 to 1. We get 3 to 1, depending on where you took your stop. So you definitely get your 2 to 1. You definitely get your 1 to 1. If you moved your stop on your 1 to 1 there, you would have been stopped out for the 2 to 1. Maybe not. No, you wouldn't actually. You would have got your 2 to 1, but you would have definitely been stopped out on, possibly got 3 to 1. It depends how you were managing your stops there, but that would be for another session to go through that in detail. So then moving on to the next, I think we've had all winners so far. Here we've got some railroad tracks, and this to me is again a pin candle by another name, because basically price has gone up. The price has opened here, gone up, come down and closed here, which is virtually a bearish pin candle. And how do we do on this? So I probably, well, we get 1 to 1 before price retraces back up. And again, I'd be watching the market at this point because we are breaking that trend line now, and so we're going to stay out of the market. We probably miss out on that down trade, and we would get back in at this point here below this support level, and I would be taking on that pin. Some people might not, but for me that's a definite intent to reject higher prices. We've had rejections there and there, so I'm in there with a trade, and we get 1 to 1, we get 1 to 2, and I think I would have been stopped out because of that retracement on the 1 to 3, but definitely get 1 to 2. And moving on, we've got a bullish engulfing, but we haven't got a higher price rejection, so I probably would stay out of that one. This one, we've had a higher price rejection, a lower low, lower close, and a bullish engulfing. So for me, that would be definitely be a trade. And if we look at that, let's see what happens there. So I think we're actually at today's value for the euro. I'm trying to pick this up, but here we go. So we didn't make the 1-to-1. Price came down, and then we got this bullish candle. And at that point, I would have got out of that trade because the market price action's telling me the market wants to go up. So as soon as we get a price action signal that we're going the other way, and that is also confirmed by this trend line where price is breaking through. So if we weren't out here, we'd definitely be out here and at a loss. But I think after this candle, it would be fairly obvious to most people we've got a bullish engulfing candle, and it's time to get out and you know, take any money you've got off the table. You'd still be slightly in profit, yeah, that's where we are. It remains to be seen what happens with the euro. And just another quick demonstration of what. I'll just get rid of this. You can see these pin candle engulfing pins find a level of previous support to. There's another one there to close out on, and there's one here. So, I mean, you can probably take them much further across, but you can see how previous market structure is confirming all these and adding to your confluence in terms of taking your downward trades, but price action just from the candles alone and break of trend lines is enough to plan your trades. And I don't know how many wins we got overall, but 1, 2, 3, 4, 5, 6. Did we win on that one? Can't remember. 6, 7, 8, 9, 10. We didn't win on that one. So 90% or 80 or 90% is quite a nice return. And some of those were at 2-to-1 or more. So you can see the value of this kind of approach in your trading. So I hope you'll take the time to like this video and to subscribe to this channel. And speak to you soon. If you want more videos, certainly please like and share these, and that will encourage me to go into this trading technique in more detail and to give you some more pointers for your trading. I hope you found it helpful, and speak to you again soon.